Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, 9th day of May, 2017, and this is the Daily Report for Gold and Silver. We have a continuation of the selling pressure that has been so prevalent in the precious metals markets. Although trading well off the low and having a pretty substantial recovery right now, we do have gold trading lower, although nominally lower compared to the low, and we'll talk about that in a second. Gold is currently trading at $1222.70. It is a fast market. It is off about $4.70. But considering that the low today was $12.14, we are a considerable ways off of the low, high being $1228.70. So we're seeing a really strong recovery as we go into settlement and the close of the afternoon trading session. Net change now down about 1/3%, although throughout most of the day, it was trading approximately 0.9% lower on the day. When we go over to silver, silver down about 7-8 cents on the day, 16.19, off about 0.5%, 0.4%. But the low today, 16.06, and the fact that for the majority of the day, silver was trading roughly 1% lower, we're certainly seeing a dynamic recovery, and there is a dynamic reason also to look for some sort of potential bounce at this point and some bottom action and support. Although there's absolutely no doubt that this market is trading under pressure and down on the day, currently trading $1221.40, putting it down about $570. There is a unique feature that we really have only seen a couple other times since this market has gone into this dramatic decline. And what I'm talking about is a recovery from lows on the day. As you can see, this market traded to a low of $12.14 before tracking aggressively higher, and although it is still trading lower on the day, off about $6, it is well off the intraday lows that were achieved. We're looking at a daily chart, and on this daily chart, we've got some key areas, some very critical areas, pretty much lines in the sand, so to speak. We have a 50% retracement, and this, of course, these larger lines represent the totality of the range from the end of last year, the beginning of the rally, up until these tops at 1297. And so our 50% comes in roughly at 1210 with a 61.8% retracement at 1190. That would be the lowest that the market could go and make any kind of a case for a continuation of the bull run that we have been witnessing. But I do believe it's more prudent to focus on the second leg of the rally, that being this move from, call it 1190 up to 1296, than the totality of the range that we have seen this year, because it gives us a more precise read, I believe, on this current correction. That being said, we want to really focus on these retracement levels. We have bypassed the 61% retracement. That was sitting at 33, and we have a 78% retracement that I believe is pretty critical to hold, sitting at 1217. Market is well above that now. It did track into that particular price point, but I would look for some potential support to come in at this area, even if what we're looking at is a bounce back up before moving to lower prices, rather than a key reversal from this most recent price decline. And traders, as far as silver goes, silver has definitively had major chart damage that we haven't seen occur in gold, because if we consider the yearly range, again, from the lows achieved at the end of last year to the highs achieved in the middle of April, when silver went above 1850 to 1866, we have absolutely, as of this week and last week, broken below a 78% retracement. And it's a 78% retracement, not of the second leg of the rally, but the total yearly range. And for that reason, I still believe silver has a real potential to trade to 1575, matching the lows that we saw at the end of 2016, beginning of 2017. In other markets that we follow, mixed bag in U.S. equities, with the Dow Jones Industrial Average closing off about 36 points, 0.2%, but both the NASDAQ as well as the Standard & Poor's are going to a new record close in the case of the NASDAQ Composite and trading near the all-time record highs in the S&P. First, to the Standard & Poor's, traded in essence unchanged, down 2.5 points, 2396, just off of the all-time record highs. But the NASDAQ closed up 0.3% at 6120. That is a new historical all-time record high. That market, that composite index, the tech-heavy sector is absolutely on fire. Lastly, I do want to take a look at the U.S. dollar. Dollar has been trading stronger all day. That on the anticipation of a rate hike in June, up about 0.5% at 99.45. So traders, if you recall from yesterday's show, I talked about the fact that the dollar, which had shown some incredible strength yesterday in trading, we got this engulfing bullish pattern right here, but it closed and the high was just shy of this long-term 200-day moving average. I was under the assumption that a continuation would see a surge above the 200-day moving average and would signal, at least on a short-term basis, a bounce in the US dollar index. We certainly got that today, and my target right now for this particular market move is to exceed these lows that came in right here and here, which are really set to where the high came in today. And if we are to breach that, the next real point of contention would come in roughly at 101, and that's based on these tops. That would be the long or the major resistance point, with minor resistance just above 100, call it 125. And traders, lastly, I certainly want to take a look at the NASDAQ, this being a weekly chart, weekly candlestick chart, and we can absolutely see how we've taken out last week's all-time new record high, closed at yet another new record high at 6120. So traders, without a question of a doubt, we are certainly at a critical area in both gold and silver pricing. We're looking at the gold-silver ratio, and that has been widening recently, especially since April, when it was trading at around, 68 ounces per ounce of gold, and now is up to 75 ounces. My sense is that if we went back into a bullish scenario in both gold and silver, silver tends to outperform gold when they move in tandem and when they're both moving in a bullish rally mode. And that, of course, would cause this particular ratio to contract. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.